We have Ed Rogers, the CEO of Rogers Investment Advisors, joining us from our Tokyo studios. And Ed, what's the deal here? Did you get into this stock? Are you going to buy in, or are you going to sit on the sidelines?
Good morning, Susan. Thanks very much for having me on the show. And hey there, Paul. How you doing? We love this IPO action. It's fantastic. As Paul notes, there's a developed economy with a lot of an aging population. But the best thing about that, as far as we're concerned, is there's a whole lot of money here. To have a $11 billion IPO in a country that's everybody's sort of written off of their investment list for the last 5 years is a fantastic event. It's a great event for the market. It's bringing new market entrants in, and we think it's a great thing for the Japanese space.
Okay, so Ed, weigh in here. Put a stamp on this. I mean, how well do you think Dai-ichi Life is going to do on day one?
Which when you're trading in the gray market at 147, 148,000, the numbers are what the numbers are. Paul's showing the screen at 160. If you're up 14% on day one, that's going to be a pretty good trade for you.
What about its pricing range? I think it priced a little cheaper than what people were expecting. Is this maybe a sign of desperation for you, or what do you think about that?
Well, people price things to sell. They're at 140, the range was variously between 125 and 150. So it's a slightly top end of that range, and it was oversubscribed. So we think it's a very good sign that there's a lot more interest. There's certainly cash on the sidelines. Japanese households have $15 trillion sitting in cash savings. What the world needs and what Japan needs is for some of that money to become actively deployed into the markets. And that's exactly what we're seeing. All of a sudden, in one day, $11 billion comes into the market. That's great for the equity markets of Japan. I would argue that's also great for the economy of Japan, because what's Dai-ichi going to do with the $11 billion? They're not just going to sit on it. It's not just cash that goes into the bank. This is cash they're going to use to improve their business somehow.
Ed, I just want to show viewers a chart which shows just how badly life insurers have done over the last couple of years. This T&D down 58% in 2 years through the financial crisis. Sony down 25%. Yeah, it was a financial crisis, but the Nikkei is only down 12%, and China Life is up 37%. I take your point about people were prepared to spend $11 billion on these shares, and that money will flow through in the economy. But you wouldn't actually buy this stock itself, would you? Or would you?
Well, I'm not going to comment on the stock itself, but what I'm going to comment on is the fact that now they've got $11 billion to invest, and they can go out there and invest it wisely in hedge fund products, alternative investment products that do not have the negative skew profile of the long-only investment world. I think that there's a huge push on now for people to manage their money better. And if anything, we've learned over the last 3 or 4 years is that the alternative investment space does a far better job of protecting against those downside graphs that you're showing.
Well, are they talking, do you know if they're talking to hedge funds about putting this money somewhere? Have they come to you, or have you approached them?
Well, it's an insurance company. I think that I could submit a lot of data to you that pension funds, insurance companies, many of them are more and more following the endowment model. So if you go to any of the major prime brokerage, tier one investment banks, they'll show you surveys that very resoundingly state that the industry, as far as pension funds is concerned, as far as insurance companies are concerned, no one has really been decreasing their allocations to the hedge fund and alternative space. In fact, they've been increasing them. And what I believe we'll see in Japan is the same reaction on the institutional world level that we saw in the United States after the tech wreck in 2000, 2001. That's really what started off the institutional investing in the hedge fund space, because hedge funds did a far better job of protecting on the downside. We've had an awful run in Japan over the last 5 years. The Nikkei is down, it's still down. The Topix is down about 43%. How do you protect yourself against that eventuality? The answer is more and more, I think, people believe the alternative investment space.
Okay, well, Ed, despite Japan being down, you said the last time you were here that Japan really is the best equity investment in 2010. So tell me, where's the Nikkei going to finish up the year then?
Well, I don't know where the Nikkei is going to finish up the year, but I think it was February 24th when we had that interview, and Nikkei was up about 10% this month. So so far, it looks like I'm on target. Japan, as Paul noted, it's an old developed economy, yet the major indices are up. The Topix is up almost 9% for the year, versus the United States up about 5%. So, yeah. If you're a conservative long-only investor and you're looking for an index to put your money into, then Nikkei or the Topix is doing quite well this year.
Okay, what about that cheap yen? You know, we've seen it move, what, 3 points in the last week or so? I mean, could that push the benchmarks higher and stocks higher from here?
Sure. If the, let's say the dollar yen we see go back to 100, it makes it a lot easier, a lot cheaper, if you will, for foreigners to buy Japanese stocks.
Okay, one more question for you, Ed, because we can't get carried away here without talking about the Tankan survey. It is Tankan Day in Japan. As an investor, what are you watching out for?
Well, I mean, the estimates are the number's going to come in around -13, -14, a big improvement, quite frankly, over the last Tankan, which is -25, I believe. So people are much more optimistic. If you go and you look at for example, the auto sector, exports to China alone are up triple digits, everything around the auto sector. If you look at the electrical equipment manufacturing, construction, a lot of major industries or major sectors where Japan is very, very strong, you've still got a rising China and you've got a recovering America. So Japan is going to make money selling to both of those markets. Arguably the two most important markets in the world are China and the United States to the Japanese industrial manufacturing base. So we think that we're still in for a pretty good year here in Japan. Actually,
okay,
I'll stand by my statements for February. This is going to be one of the best markets in the world this year for hedge funds and for long-only investors, and 95% of all investors will walk away from Japan and not be invested.
Oh, Ed, I knew you were going to plug that in. Shameless you are. Ed Rogers joining us from Tokyo, CEO of Rogers Investment. And we're going to